All right, folks, welcome back. This is our Tuesday, December 7th, 2021 commentary. This one's going to be very brief, and I know in the past you've heard me say that. It turns out to be, an hour and a half, almost 2 hours sometimes, maybe even more. But I have a birthday with my wife to celebrate, but I have to get off here and make her birthday cake and have a birthday dinner with her tonight, so. Dollar index daily chart. You can see, again, just still inside of this consolidation in here. I mentioned that it's kind of like drawing into smaller ranges, and I'm favoring, again, still the upside draw into this area here. And while I was not able to sit down and do any tape reading this morning, obviously, for personal reasons and family things, I want you to consider what we have been outlining, the preferred bias, which would be higher dollar, lower foreign currency. On the hourly chart, dealing range high we've been referring to, that's the draw on liquidity. We want to see it go up into this, okay, and not just go there and be above it, therefore we go in short foreign currency at that point. It's just for a prolonged duration and momentum, it needs to get above here, then retrace to some degree, then show another level of displacement on the upside, and then whatever imbalances that were created from that would be used to continue looking for higher prices on dollar. But from a perspective inside this dealing range here and here, we've been focusing on the higher side. The order block here on the hourly chart, I mentioned that yesterday, and then we have consequent encroachment of this candle's tail. Hits it perfectly. Look at your data on the dollar index. The midpoint of the close to the low comes in exactly at that low. Hits it, and then starts to rally. This is also optimal trade entry with a bias, looking for higher prices. And while it didn't get to this high yet, which is interesting because when we look at the euro has actually made its way lower than its dealing range low, respectively, on that day. And the 15-minute time frame, volume imbalance in here, doesn't really add any more benefit to it, but we do see it trade down into the last down close candle in here, bullish order block. And this is, I actually should have had this extend out to here, but this is the consequent encroachment of that hourly tail on that candle I just mentioned, and it goes right down to it, hits it perfectly there. Not one pipette short, not one pipette over. Displacement on the upside. Notice it doesn't take out the high. Retraces back down in. Rallies again. Order block. Does it rally? Yes. Order block. Does it rally? Yes. Runs through. Attacks the buy side liquidity here. And then we're back inside the range again. Euro dollar daily chart. I mentioned I'd like to see it just stay heavy. The catalyst to change gears and anticipate higher prices would be a daily close above the rejection block in here. That still is the line in the sand that changes the directional bias on the higher time frame. For me, I'm going to stay with this narrative that we're looking to dig into this low, and that's my objective here. But if it gets down into this level here and stalls, just wait for maybe a 1 day up close on the daily chart, and as long as it's not exceedingly large, that will be just another area to expect the next day being bearish. Okay, I'd prefer actually to see large candles, closing lower on this particular pair and higher prices on the dollar index daily. But I'm still aiming for that 111.68 level. Euro dollar hourly chart. All right, so in your notes, I've been teaching you how to use the kill zones a little bit more effectively and looking for PD arrays that exist inside these respective kill zones. If we look through candles, because we're not supply and demand, just ignore all this right here and go back to this imbalance right there. Okay, that occurred in around the 11 o'clock hour on this particular trading day, and you extend those imbalances in time. Consequent encroachment trades to it here, then breaks down, attacking what? Sell side liquidity here, and then this low here. High of the day forming just with the run inside that imbalance. Displacement breaks down and finally again attacks all the sell stops resting below that low. All right, 15-minute time frame on the euro dollar. Here is midnight New York time. Judas swing higher, consequent encroachment on that imbalance from the hourly chart. Again, cut through the candles because this period of time with all this whipsawing and such, while this created the SMT divergence, notice it did not go above that. Remember the tape reading session I did on the other day? This is your SMT divergence. It was failing to make a higher high when the dollar made that lower low. So it's anchoring that logic and why this right here, this is for your notes, folks. How do you know it's not going to go through this imbalance and go through these highs? Wouldn't this be a low resistance liquidity run signature? Because see, it has that lower high to the right than this one, right? Wrong. Okay. What is the bias? The higher time frame order flow is bearish on euro dollar. So we're submitting to that. If that's the case, and we had SMT here relative to the dollar index making a lower low, the higher high was not formed in euro. So it's saying that this is a intermediate term high. And when it rallies up, yes, it can trade up to this level here, but it should stop. It should not take out these highs because the bias on the higher time frame is bearish. And all it's going to do is reach for consequent encroachment or closing the entire imbalance and then sell off. Okay, we have a institutional order flow entry drill here with this candle right there. It goes right up into it and then sells off. Mitigation block as well. Extend it out in time. Rolls over. Then we have fair value gap with consequent encroachment, low to high. I just didn't want to have all that on there because it's too much in here because of this old low. So annotations on your end, you can make that as friendly on your eye as you can. I just don't want to clutter the chart up. I can take your attention to the actual range. This low, this high, that's your fair value gap. Consequent encroachment hits it, and the old low here and here. Sells off, yes. Small little fair value gap right in there. Runs up, closes it in. Consolidation, and then aggressively runs for the low from last week. Bodies of the candles respecting that range, but we do have that little tail that goes below it. Then comes back and rebalances all the sell side imbalance, buy side inefficiency. Really nice little day on euro dollar. All right, pound dollars. I've been basically telling you this thing's heavy, and I don't have a downside objective for it. You know, it just look for lower prices, and don't be surprised if it has a big expansion on the downside because it can pretty much exaggerate its decline in here. I wouldn't want to see it trade above the rejection block on this candle here. So anything below that on a closing basis still keeps us bearish and looking for sell side below this low. Pound dollar, hourly chart. Took sell side liquidity out and rejection here. So sweeping the rejection block, then low, 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 extend out in time. When it traded in here, what did the retail think it was going to do? Rally. So go back to the midpoint in here. That's where the liquidity is going to be, and it's going to attack it, and a run right for it there. This low and this low here. I believe, if memory serves me correct, but double check it on your end, don't take my word for it. I believe this fell short by 1 pipette to match that low. So there's a lot of sell side building in here. So they might see it as it does here, retrace, and then maybe expand down and attack the sell side here, and then go after the low here from last week. 15-minute time frame. small little juice swing in here. This would have been better to see it run through that. I would have been more inclined to feel that that would be the better scenario, but it doesn't even have the momentum to get up there and do that. So the algorithm says, I'm not interested, and reprices lower, comes back, reprices to rebalance this area in here. What area is this? This is a balanced price range. How? Over here, see that? Up candle, single, down candle, single. So inside that range, it's a balanced price range. So when it digs into that, we wouldn't expect it to go beyond this low and dig up in here. It's just likely to hit this area here, consequent encroachment, or the low. But at the worst case scenario, the high end here should not be breached. And you see that happening there. So it rebalances, remembers this PD array, couples it with this one. Okay, we should not go higher and then break lower. Rebalance the fair value gap in here. Rebalance, optimal trade entry, sells off. Consolidation until we get to the New York session open. Then we have the Judas swing here. And then they attack the sell side liquidity in here and run for this low and just fall short of it by 1 pip. You can probably see it here. It just doesn't quite get down to it there. Rebalances up to the CIVI, bearish order block. And it looks like at the time of this screen capture, it might want to go back down in here. Who knows? It may not do it today, but I would favor it to, again, try to wash out this low over here. All right, so as I mentioned, as we get the end of this year, going into the new year, I'm going to be giving you much more detail in the teachings, and we would be revisiting all the specifics about each individual PD array. The first one I want you to consider is the institutional order flow entry drill, and your assignment is to take a piece of paper, or you can type it out on your computer. Do not put it in your study journal, okay? Because you may put things in there that are not really the things I want you to know about this particular PD array, and you'll just waste space or fill your study journal up with things that are not correct. So on a piece of paper or some other medium that's not in your study journal, because you want your notes to be there for the duration of your career. Your assignment is to describe all the characteristics you presently understand about this specific PD array. In other words, what do you know about institutional order flow entry drills? You may not know a lot. You may have more questions than you have understanding about it. That's okay. But list the things that you know about it and or describe what constitutes an institutional order flow entry drill. When you do this, be objective about it, but don't be overbearing. In other words, don't insist that you have everything understood about it, because I'm going to teach a little bit more about it tomorrow in the midweek commentary. So that's going to be the focus in the lecture. But for the benefit of learning and checking yourself as far as what you understand, list the things and describe what an institutional order flow entry drill is, what makes it such, how does it form, where does it form, why would it form? Okay, and I'll cover all those things tomorrow in the midweek review. Until I talk to you then, be safe.